Fed kicking off a two-day meeting, and Steve Liesman joins us at the table with the CNBC Fed survey results.
Exclusive results of the
Exclusive
CNBC
results.
exclusive Fed survey.
Yes.
Thank you, Andrew. Well, apparently bears and policymakers hibernate, and that's the expectation for the Federal Reserve. Is a long period of. Hey, if you did this survey for 10 years the way I have, you would come up with weird stuff to continue to make it entertaining. Here's the outlook, or what we call Fed expectations. 100% of our 43 respondents, which include fund managers, economists, and strategists, think the Fed will be on hold this month. And only 48% think there'll be a rate cut next year. And the average time for that rate cut, or when that finally happens, is in June. So 6 months of hold is the forecast. I want to show you how much stimulus there is in the system now, or how much easing there's actually been. You guys go back to our Fed survey in December 2018. The expectation for the funds rate in 2020 was 2.9%, call it 3. We are now at 1.625 in the actual rate, and the expectation for the end of 2020 is just 1.5%. And I can show you this more strikingly if you look back to December 2018, when the funds rate was 2.1%, and they thought it was going to go to 2.7, 2.8, and then go to the next, where we are now, we're at 1.6, thinking we're going to 1.5%. You know, the averages sometimes hide conflict or disagreement beneath the surface. Kathy Bastianic, chief U.S. financial market economist at Oxford, writes, the risks to the outlook for economic growth and inflation are still tilted to the downside, and the door to future rate cuts remains open. On the other hand, Richard Sichel, senior investment strategist at the Philadelphia Trust Company, says the U.S. economy continues to be stronger than many observers think. It keeps climbing a wall of worry. We have estimates, guys, for growth next year that range from negative 0.5% to 3%. So there is a market out there in the 2020 forecast, as I'm sure you know there is in the outlook for the stock market.